Our next guest says Beijing misguided stock market bailout is only delaying the inevitable and that critical reforms are needed. Well, he's the independent economist, Andy Shea. So, misguided, you say?
Yeah, I think that you cannot change an economy by manipulating financial markets. Financial markets need to reflect fundamentals. If we do not change the fundamentals, markets could stay levitated for a period of time, then they fall back.
Well, that's the thing, but they allowed it to get into that position, so it was misguided to begin with, I suppose you could argue.
Yeah, a year ago, when a lot of people started pushing up the market, the theory was that a rising market would bail out of the economy, not the other way around. So now we know that theory didn't work, but it wasted precious 1 year of time and wasted a lot of money and hurt a lot of people.
So the stock market has essentially got to find its own level now, as all markets should do. So will they be in there at the moment buying up some of these stocks?
Yeah, well, as long as the government is trying to prop up the market, they are not giving up. Fundamentals are like gravity, and you can talk about who's doing what every day, and the market can go up for a period of time, but eventually, unfortunately, the reality bites.
That's the thing, and if you're saying representing fundamentals, are you saying fundamentals of the corporates or fundamentals of the economy overall?
Oh, PPI has been falling for 2 years in a row. That reflects overcapacity, overinvestment, and misallocation of credit. So China's problem is misallocation of resources, not competitiveness like Europe or Japan. It's really about the government mismanaging the economy.
Well, I would argue that perhaps they're not mismanaging it, that this is actually what is going to happen. You have this painful transition towards a more consumptive economy. And you're already seeing it with the service side of the economy now bigger than the manufacturing side of the economy.
Well, you look at the service sector, is not really doing that well. You look at all the listed
At least it's positive when it comes to the PMIs.
Well, the positive is because that the labor force is shrinking. So even though the economy is weak, the real wage level is still supported. So that's why the household sector is okay. But a lot of high value added, the service sector is tied up with the investment cycle. So I don't see anything good going on there.
Right. So, Andy, what do you see? Because I think you've been writing about this for a while, that you were expecting a hard landing.
Well, no, I think a hard landing is really a concept of bankruptcies. If you allow bankruptcies, then you have hard landings. But in China, the bankruptcies are very difficult to happen. And the local governments, banks often sit down and prop up companies that are in trouble. That's why we see PPI always negative, because nobody is leaving, if somebody is not making money, he keeps going. So I think that the hard landing is a good thing. Soft landing is a bad thing. And a hard landing will force you to change. Hard landing means that you are changing. But unfortunately, in the short term, we're not seeing that. When you hear a lot of bankruptcies, you know China is changing.
Absolutely. And how would you know? I mean, we often talk about this electricity supply, railway usage, etc., as being the real gauge of growth. Do you still believe that that's the case?
A lot of companies are listed. We see their yearly earnings reports. Across all the spectrum of the economy. So I think that the stock market, when you see the companies are all reporting declining earnings, and PPI is negative, you cannot cheat on prices, because the prices, you can see the prices every day. If the prices are going down, the economy cannot be doing well.
Housing. We often talk about housing, not mentioned at this time. People point to the housing market as being the rock of solidity at the moment, because everything else seems to be in fluctuation, everything else is volatile. But housing seems to have stabilized, they point to. But has it really?
No, you look at most developers are technically bankrupt. They're still hanging around. They are not selling because the banks are not foreclosing on them. Now, the good news is from tier 1 cities like Beijing and Shanghai. The prices are holding up. The reason the prices are holding up is because they have cut supplies by 70 to 80%. So I'm not sure that it's like really going up. If you have to cut supplies by 70 to 80% to hold up the prices, I'm not sure that's a good situation.
Andy, I know you're an economist, but you're saying that the right price of the Shanghai Composite is, what, 2,500 or thereabouts?
I think
that's based on fundamentals, yeah?
Yeah, I think that if you have a good economy, then the PE ratio could be higher. You look at the Chinex index; it's down half, but the PE is 60 times. And a lot of companies we know overstated their earnings. So if it falls another half, it's still 30 times. 30 times you have to be really high quality. I'm not sure that most of the companies listed there are high quality. So you look down, it's really a long way to fall.
Andy, thank you so much for coming in this morning. Andy Shea there, he's an independent economist.
Sure.